Welcome back to Stately Investing. In today's episode, we're looking at Realty Income versus STOR Capital, two of my favorite REITs. Before we jump into that, we'll look at some weekly portfolio updates in both my M1 accounts and my Robinhood account. And then we will look at Realty Income versus STOR Capital. So we'll look at their business models, how they're similar, how they're different, the size of each company and their financials. And then lastly, we'll look at their dividends and how they fit into my portfolio. But first, if you want a channel that's going to help you speed up your journey to financial freedom through dividend growth investing, Stately Investing is the place for you. So hit that like button, hit that subscribe button, and turn on notifications, and let's get started. All right, first we are looking at my M1 account for the week. We are currently at $38,227. And for the week, we got a return of 4.13%, so a bit of a recovery from last week. The overall gain was around $1,500, which is good to see. Most of that, again, was in market gains of $1,500 and then earned dividends of around $10. So let's jump into the activities tab to see what was going on for the week. So you can see my usual deposit, right? My weekly deposit of $250. And that led to 12 buys, and then there was enough dividends to make a secondary buy the next day. So you can see where these dividends came in, right? This was all kind of at the beginning of the week. So Verizon, Edison International, AT&T was the big one here on November 2nd with $24, and then Edison International, those must have been broken up into two separate payouts. So overall, you can see it was the telecom and the energy sectors paying out this first week of November, leading to several buys. So why don't we jump over to my Robinhood account so you can see what occurred there. So in my Robinhood account for the week, you can see that I am now up to $21,228, a gain of around 2.8% for the week, or $577. And that is up again from the previous week where we were a little bit down along with most of the market. You can see that, this is all market gains here because it's not really showing my dividends as part of that gain. But I did receive some money from AT&T similar to my M1 account. So why don't we jump into my history and you guys can see what's been going on. So you can see that on November 2nd, I got a dividend from AT&T in the amount of $42.65. And that was directly reinvested directly into AT&T. So that purchased more AT&T shares. You can also see what I like about Robinhood is you can see your upcoming dividends as well in your history. So that was the week for both of my portfolios. So why don't we jump in and start comparing Realty Income versus STOR Capital. All right, so let's jump into the analysis between Realty Income and STOR Capital. We're going to look at several different aspects of each company to understand what they do, how they do it, and why they may or may not be right for your dividend growth investment portfolio. So first, we're going to look at their business models. We are going to examine how they operate business and look at the similarities and differences between the two. So most of you should be familiar with REITs, so real estate investment trusts, as a mechanism for dividend growth. And both of these companies are REITs. They are basically landlords, right? And they rent out to companies. They own the space, and then those companies occupy their buildings or their land. And so that's how they make their money as landlords. They are real estate investors, and they receive payments from their tenants. But let's jump into the individual web pages of each site, and they can explain a little more in more detail what they do. So we're on Realty Income's site here, and we're looking at their portfolio or the assets that they have, right? The different tenants that they have in different locations. So they mostly focus on retail, and you can see who their top 20 tenants are. So if we scroll down, you can see that Walgreens makes up the majority of their leases. So 248 leases is actually not the highest number of leases. Like if you look at Dollar General, it seems to be the highest. But overall, the amount of revenue that is generated is Walgreens. And you can see the list kind of goes down from there, right? So Walgreens, 7-Eleven, Dollar General, FedEx, Dollar Tree, LA Fitness, Regal Cinemas, right? So there's a lot of convenience stores and shopping and retail, but there's also some athletic centers and entertainment and just overall like wholesale clubs. So there's quite a bit of retail, but there's a mix of tenants, and you can actually see that if you go to their industry diversification page. So you can see the different industries that each one of these is in. You can see convenience stores make makes up 12%. Drugstores makes up another 8%, right? And those seem to be the two biggest industries. So overall, what Realty Income does is they specialize in top tier tenants in the retail space, and they are generating most of their income from those leases. So if we hop over to STOR Capital, we can see if that's similar or different. All right, so we actually jumped over to a Simply Safe Dividends analysis of STOR to look at their list of tenants. It's actually surprisingly hard to find on STOR's website. So in this article, they talk about STOR's business model and mostly about their tenants. And so you can see here that this, again, is based off of rent and how much money they're collecting. Here are their top tenants. So Art Van Furniture, Mills Fleet Farm Group, Bass Pro Group, cinemas, AMCs, basically Stratford Schools, some education in here. So it's pretty diverse, right? They have over 400 sets of customers, making up a large swath of real estate tenants. And so that is one of the differences between Realty Income and STOR. So Realty Income tends to go after large, kind of brand name retail, top tenant, recognizable names, whereas STOR goes after kind of a second tier of retail, or education or other kind of more diverse set. So stores that you may or may not recognize, but are smaller in size and smaller in revenue typically. However, what STOR has going for it is they have longer leases, and so they typically are holding onto those tenants much longer. They also have master leases, meaning that the tenant is responsible as a company to pay for all of their stores. So it's not an individual store paying its lease. That company has to pay the lease for all of its properties under the STOR umbrella. So I think that makes it there's a slight difference there between Realty Income and STOR. Overall, their business models are very similar, but let's jump back into the presentation to see what our second point of analysis will be. All right, so after business models, we are going to look at the size of the companies and their financials. So you guys know that STOR Capital is my favorite stock, and that might not be a spoiler for most of you. And we did a analysis of their financials in a previous video. So I'll put a link up top to my video called STOR Capital is my favorite stock. You guys can see more of the financials specifically for STOR there. But overall, we're going to look at the size of the companies and the differences in their financial statements. So why don't we jump over to Realty Income first? All right, so we're in Realty Income's 2019 annual report, and we're looking at some of the financials. There's just a few key takeaways I want to highlight for you guys in this report, but you can also see a link to the report down below. So if we look at 2019, their total revenue was $1.4 billion. That's quite a bit for a REIT. I think they might be the biggest individual REIT out there. Don't quote me on that. You guys can leave a comment below and do some of that research for me. But overall, their adjusted funds from operations, so their AFFO, was over $1 billion. And you can see the number of properties that they had was 6,483. So quite a few number of properties. I believe they operate in both the US and the UK. And overall, it kind of breaks out, the square feet, the cost of the properties they acquired, right? So they go out and buy the land and they develop these stores. But overall, they are making, tons of money by having just lease tenants, and their occupancy rate has been consistently high for a very long time. So they're in the 98 to 99% range for most of their years. So let's scroll down a little bit, and we are going to, again, you can see the real estate portfolio here, right? So Starbucks, Wendy's, NTB, right? Like just these top tenant leases, brand names that you recognize. We talked about the industries already. So what I want to scroll down to here in the report is this quote here, right? So our size, scale, and cost of capital are important competitive advantages within the net lease sector. So basically what they're saying is because we are so big, we're such a big landlord, we are able to, and have such a great success record, we're able to secure the biggest and best tenants out there. And it provides stability, right? So one thing you want in a real estate investment trust is stability and growth. And because of Realty Income size, they are able to not necessarily guarantee it, but they have a distinct advantage versus other competitors out there like STOR. You can see just the acquisitions, their selectivity, right? Like here's the opportunities they explored, but how many they actually chose, and it's gone down over the years. So they're more selective about who they allow to become a tenant, and that's just that goes to speak to the quality of their business and the quality of their stock in general. And then also, this is an important kind of chart here, right? Is their capital structure. So if we're looking on the liabilities and equity side of the asset equation, you can see that their common equity is at 75% and only less than 25% in debt. And that was at the time of the end of the year in 2019. It'll be interesting to see what that looks like in 2020 to see if they had to raise debt at all. But generally, they have a pretty good debt level for a REIT of this size. So why don't we jump over to the income statements and cash flow statements from STOR Capital to see how it compares. So if we look at the income statement for STOR Capital in 2019, that's this column that I'm highlighting here, you can see that their rental revenues are $625 million, and that totaled revenue was $665 million. So almost exactly 2/3 of that $1 billion number from Realty Income. So smaller in size, but they also have fewer properties. So I'm actually going to jump back to that other article we saw on STOR Capital to understand the number of properties that they have and the differences in their size. All right, so we're back in that Simply Safe Dividends article, and it shows that STOR owns 2,200 properties. This was at April of 2019, so the numbers aren't going to be exactly matching, but in general, they have over 2,200 properties leased under long-term contracts to more than 400 companies. And again, they have some of the, I believe, the longest lease durations in the industry. Their average lease duration is 14 years. I think it's up to 15 years as of 2020. So while these are smaller businesses, and there's more risk to that, meaning that their tenants might default on their leases, overall their growth has been higher than most of the industry. And so because they are picking these somewhat riskier tenants, but locking them into longer master leases, they're able to still provide stability similar to Realty Income, right? So the main takeaway here is that the sizes of the businesses are different, right? Realty Income is bigger and their strategy is a little different in that they are generating massive amounts of income based off of high quality tenants, whereas STOR Capital is smaller in size, but is locking their leases in longer, and they are more diverse across roughly 100 industries. So I think there's differences between the two companies, and I think there's more potential growth for STOR. But overall, I think if you want stability, you would pick Realty Income. Now, having said that, I have both of these in my portfolio. They're two of my biggest holdings across all of my portfolios. I think they're both great. But why don't we jump back into the presentation to look at the third bullet of analysis and then declare a winner. All right, so we're back in the presentation here, and we've looked at their business models and we looked at the size of their companies and financials. And the last point of evaluation is the most important, right, for this channel, which is dividend history and growth. So we're going to look at the dividend history of both companies, understand the differences there, and hopefully understand how they fit into my portfolio and potentially your portfolio. All right, so we are on Realty Income's site here again, and this is on their homepage, and you can see that they highlight their monthly dividends, strong shareholder returns right here on their website or on their homepage. It's very important, right? And I think the key difference is that Realty Income is a monthly dividend payer, whereas STOR Capital is quarterly. So that might matter to some of you investors out there if you wanted to see kind of stable monthly income, or you wanted to kind of make up for gaps in when your dividends are paid out by your other stocks. Realty Income, again, the message here is stability, right? They are able to pay this out on a monthly basis. You can see that they had 603 consecutive monthly dividends paid. That's just an amazing track record. 92 consecutive quarterly increases. So why don't we jump in to learn more about their monthly dividends? Again, you can see that number here, 108 dividend increases. And then you can see dividend growth of 212%. So I'm assuming this is from the start of their company, but overall their dividend growth track record is just amazing. They continue to pay this out. And again, their compound average growth rate, annual growth rate, is about 4.5%. That means every year you're gaining another 4.5% just by owning that stock. It's almost like getting a raise, right? And like, how many of you are getting 4.5% raises every year? I doubt many of you are. And so this is a way to make your money work for you, right? That's really the key message here around Realty Income and REITs in general, and just dividend growth in general, right? The dividend growth strategy is to make your money grow through the power of compounding, the power of reinvestment, and the power of time. And so I think Realty Income really aligns to all of those metrics. And let's jump over to STOR Capital to understand how their dividends work. So we're here on Seeking Alpha looking at STOR Capital's dividend growth. And you can see I'm on the dividends tab and I'm under dividend growth. And for 1 year growth rate, the trailing 12 months, that's what TTM stands for, is 7.3%. So what that shows is that they've actually grown their dividend during COVID, which is kind of ridiculous, right? It's kind of rare in the stock market in general, but especially for REITs, that they're able to grow their dividend because they are making that much money. So, STOR dropped very dramatically at the beginning of the COVID crisis. So in the March timeframe when the stock market tanked, STOR dropped, I think it was like 45% or something like that. And prices were very low. People were very down on STOR. And that's when I went in and bought a ton, right? You can see another video that I have on what to do when the market dips. I'll put a link up top. But generally, they are able to, they were able to recover. Those leases start coming back, right? So people were worried that tenants wouldn't be able to pay leases. But if retail was able to survive COVID, it shows that STOR Capital really has the strength to be a good landlord, a good REIT. And so that's why their growth rate was so high in this past 12 months. For the past 3 years, it's sitting right around 6%. There's on Seeking Alpha, they don't have the 5-year growth rate for this company, mostly because they're showing only 5 years of growth. But overall, I would say the difference between STOR and Realty Income is that STOR has a higher potential for growth, right? That's the story that I'm showing here. Is STOR is your growth engine, and that growth engine aligns with my dividend growth strategy. So I want my money to work for me. All I want to do is be able to purchase quality companies and know that they're going to grow their dividend consistently over time, right? So that way, any reinvestments that are happening, I'm getting even more value from that because they're also growing their dividend. Now, what Realty Income offers is stability and high quality. That company is going to succeed. They're going to consistently pay out dividends every month. I think, the timing of monthly versus quarterly is not a big deal for most people. Some people like monthly because they are reinvesting their dividends, right, which I highly encourage. And so by getting that monthly payout, you're also purchasing shares monthly because you're just reinvesting back into that company. But overall, I would say for this last point of analysis, I would give the win to STOR just because they have a higher potential for growth. So why don't we jump back to the presentation and do a quick recap and pick a winner. All right, so we're back in the presentation here and we are going to pick a winner. So we looked at business models. The business models between these two companies are very similar, right? It's just a matter of different tenants. I would give the slight edge to Realty Income in this category just based off of the quality and the number and the size. I think that they are slightly better positioned with the tenants that they have to maintain their occupancy rates and to maintain their revenue streams. However, STOR is able to take on slightly riskier tenants and be more diversified and have higher potential for growth based off of their lease structures. But I give the win to Realty Income there. As far as the size of the companies and their financials, I think overall it is, Realty Income is bigger, STOR is a little smaller, but their financials are pretty consistent, right? So the nice thing about Realty Income is their low levels of debt. But I think, STOR Capital has a really good CEO and a really good management team. And so overall, I'm going to give this one a tie. I think that both companies are positioned well for what they want to do with their slightly different strategies, but very similar business models. And overall, their financials look solid. That STOR was able to handle COVID proves that they really have the ability to survive in this industry. And I think that, this second bullet is really a wash. Lastly, dividend history and growth. So there's no competing with Realty Income's dividend history as far as the consistency and the ability to grow the dividend, and their ability to do it on just on such a long period of time. They've shown through their statistics, right, that they're able to grow consecutively. And it's just, again, you're talking about consistency there. However, on the growth side, I think STOR Capital has more potential for growth based off of their business structure. And that aligns really well with my dividend growth investment strategy. So I'm going to give the win to STOR there. So basically, we have a tie, right? And so if we equally weight all three of these metrics, I think the business model for Realty Income wins out. I think it's a tie on the size and the financials. And I think that it's a win for STOR Capital because of their growth. So hopefully you guys got a lot out of this video. It's somewhat similar to the video I did on Philip Morris versus Altria. Again, I'm going to put a link up top so you guys can view that, and a link below so you can link directly to that video. If you like these kinds of videos, let me know in the comments down below. Feel free to give me a like, a thumbs up, and a subscribe. I appreciate all of the views and subscriptions, and just let me know what kind of content you want to see in the future. So hopefully you guys got a ton out of this video. I enjoyed doing this video. They're two of my favorite stocks, and I will see you guys again next week.